Welcome to the Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. This is going to be a fast coming at you show, all directions. There's just so much happening. My name is Jeremy Wiseman. I'm joined by Jerry Correa. The number 18778 Silver, the website, guildhallwealth.com. So buckle up. Jerry, we have to talk about the pullback in gold and silver. But one thing we discovered while that was happening is that Canada has a repo market. I didn't even know Canada had a repo market, let alone that it was in major trouble over the last couple days. Do you want to tell us a little bit about that?
I'll try to do that. Yeah, it was definitely a surprise. This is the Bank of Canada's repo market. Over the last week, what was reported, what is swirling around in the media, obviously, it's not going to be on the mainstream so much, but the Bank of Canada repo crisis is rapidly worsening. This week, one of the banks required $16 billion in liquidity injections that happened over the course of the week. One of these banks is in trouble. We don't know which one, and this is Canadian news. Bank of Canada is currently conducting this overnight repo operation. It's a repurchase agreement, Jeremy. A repo is a form of short-term borrowing for dealers in government securities. In the case of a repo, a dealer sells government securities to investors, usually on an overnight basis, and then buys them back the following day at a slightly higher price. In this instant, the bank is buying back its own securities because the interest rate on the street is higher than the target rate. And the bank is doing this to cool the market, to prevent losses on the bonds. But it's nearly 80% of settlement balances that are held by the three banks here in Canada. They're not lending it to the rest who only have collateral. This is why the Bank of Canada, one commenter is stating that the Bank of Canada is intervening in the overnight repo market because these banks need cash fast. This begs the question why the banks with cash aren't willing to lend it if the other banks are putting up their own collateral. You have collateral in your banks, pledge it.
So basically, these banks that have cash that could lend out don't want to lend it out. They're not trusting the collateral.
What's the collateral, right? Exactly.
Of the other banks.
And this person's hint says probably because their collateral, which is bonds and paper and mortgage-backed securities, they're viewed as BS. This is exactly what happened to Lehman Brothers in the Great Financial Crisis. They didn't have an adequate collateral to support any loans, forcing the ultimate bankruptcy. They went belly up. So this is something that we have to keep an eye on. Repo market crisis now in Canada. I thought it was always the U.S., Jeremy.
I don't know, and I like that you called it layman, by the way.
But this is all on the back of the Bank of Canada cutting rates this week to 4.5%.
And by the way, that's one of those things that you see. We've talked about on our show. You can lower the interest rate, or you could raise the interest rate, whatever you're doing. But if you're printing $17 billion or lending out $17 billion, that's going to be paid for by the Canadian taxpayer. Who are you helping? I mean, yes, none of us want to see the entire banking system collapse, but it's a signal that the banking system is in major trouble. And the question is do you want to have your assets as a major part of those institutions when you don't know what's going to happen? And there's a cost to it, because if you want the government to save these banks, it's coming off of your paycheck, ultimately.
Yeah.
And it's also a signal as well, Jerry. You were telling me just before the show started that with the earnings over the last week from major corporations, we'll talk about that in a moment. But Visa, delinquencies, you always depend on them doing very well in the market, but delinquencies are catching up. Mm-hmm. Again, this kind of goes in line with banks not trusting each other.
Yeah, Visa was the logic trade. If we're heading towards a recession or a market slowdown, we're going to get people are going to use credit cards. So logically, going to jump into Visa. But after a while, it becomes unbearable, unsustainable. Visa down with the rest. This week there was a massive over $1 trillion in market cap for the Magnificent Seven, a huge loss. Earnings reports were poor across the board, from Deutsche Bank to Tesla, Ford, Google, but Visa on the back of delinquencies. This is now catching up, not just for the people, I mean, this is all across the board, and this is now Visa losing big time in this market environment.
So look, you can avoid reality, but you can't avoid the consequences of avoiding reality.
Never.
And it's setting in. It could set in very hard. And at the same time, both gold and silver have had a spectacular year. I mean, they've had a spectacular 20 years if you want to look at the larger picture. But gold and silver have done very, very well this year. Now, we started to have a pullback over the last few days. Gold really hung in there for a couple days. We did start to pull back, haven't quite yet hit down to $2,300, but we did come off about $100 off gold. Silver, which had traded as high as a little over $32 an ounce at one point, back down into the $27 range, which I was mentioning to a client. I said, I didn't think it would get to $30 that quick. So to be at 27, I thought, oh, okay, well, we're still way above $22, $23 from where we started the beginning of the year. As we started to see that pullback, Jerry, what did you make of it? What were your thoughts?
Well, I started to look at the silver market, and obviously with options expiring the same day from the New York Stock Exchange, option expiring on Wednesday. You have the usual dip, going into options expiring. And then the following day, another $70 drop, another 24 hours later. So it's a lot of skullduggery from the same market players, the JP Morgans and the Citigroup and you name it. These are the banks that are trading paper. And this is coming from TF Metals report, the amount of paper. And even the dude was writing this week that market traded 645 million paper ounces yesterday to manipulate the price down. COMEX had 3 deliveries. That's 15,000 ounces. This doesn't make any sense to us, he says. The U.S. debt clock states paper to physical is now 400 to 1, 402 to 1 today. That is the number of paper ounces traded in the world's silver and gold exchanges divided by the actual world production of silver or gold in ounces. There's not enough physical.
No, we're in a deficit. There's less coming out of the ground than we're using. The number 18778 silver, the website guildhallwealth.com. Now here's the real kicker. Price comes down on silver. My dad gets on the phone to the wholesalers to buy. And by the way, he gets up in the middle of the night to do this stuff. He's just constantly, I don't know, maybe it's an age thing, but he's just constantly up in the middle of the night. He'll try to buy product through their systems. Nothing. We got something like a couple thousand ounces, maybe 3,000 ounces of silver. And he tried over and over again. Small products, good luck. Bigger products like 100-ounce bars, really, really tough to get. So lower prices, but where's the silver? Mm-hmm. Come on, we know this is fake. And we've gone through it so many times, Jerry, as well, that at this point I'm on X, and you can see people saying, oh, something big must be coming. I thought, oh, they must be listening to the Real Money Show, because that's what we always say. Whenever you see a pullback in the market, there must be something big coming our way.
Of course. The VIX, if we watch what was going on in that overnight, from the events that happened from Wednesday, Thursday, from the issue in Japan, something broke in that market in the overnight. The VIX spiked at over 22%. And there was a huge correlation between the VIX and silver. So you have to get that barometer, that indicator that tells the world that something's going on to temper that price of silver down. The economic indicators that we're using today, they don't work. Right? You can't rely on these indicators. So we have to follow what the world is doing, what they're saying, what traders are saying, what they're doing. And even in the overnight, the TF Metals report even reported about a surprise supply of silver coming to the market. Oh, that was the
biggest joke.
Here it is.
Who put that out though?
TF.
Right. TF Metals, Turd Ferguson. Oh my gosh, I saw this. He put this out real early, that there was some sort of report that got posted that a mine supply of 45 million ounces was discovered. Oh my gosh. And I instantly thought of these reports that we used to check out online. They'd say, oh, we've discovered how to create gold. We can create gold in a lab now. Yeah, it takes us 50,000 hours, but we can create what was it, like 2 grams?
A couple grams.
And you're just, come on, guys, this is a joke. You're floating it out. That's your excuse. I mean, how much do you pay the 22-year-old reporter to write that piece of garbage article, right? Mm-hmm. And that's supposed to hedge funds who have hundreds of millions of dollars to invest to start getting out of their long positions and shorting silver? I mean, come on. This is an after the fact type of article.
Exactly.
But nonetheless, I love that he put it out because it just goes to show the type of shenanigans in this market. We're going to get more into the shenanigans because, as you said, Jerry, there's so much misinfo, manipulated data. Where do you actually go to find out what's happening? Also, what is JP Morgan advising its clients? Are they telling you, a la Kramer 2008, to buy the dip, or are they telling you to get out of the market? We're going to tell you about that on the other side of the break. And as well, not JP Morgan, but Morgan Stanley, what is their call for gold for the rest of 2024? There's so much more to come, but if you want to get involved in the physical gold and silver market, you want to buy at a lower price if you can. And here it is. You have the opportunity. Less risk, more upside, pennies to the downside, dollars to the upside. Great time to make a initial acquisition in the metals. The number 18778 silver, the website guildhallwealth.com. And remember, everything at Guildhall is physical. We are not dealing in equities. We are not dealing in counterparty risk. This is not an ETF that you're going to pay management fees for and storage fees for a product that you don't even own. This is, you are going to acquire actual physical gold, hold in your hand, that's going to be held in a sub-account at a vault outside the banking system. You couldn't ask for a more secure vehicle for your physical wealth.
That is right.
As opposed to leaving it in ones and twos with banks that have to be bailed out to the tune of $17 billion. The number 18778 silver, the website guildhallwealth.com. We're talking about the ways that physical gold and silver are going to protect your wealth and grow your wealth. There is such tremendous opportunity. And as you're listening to the type of facts that we're bringing to the table here, this is common sense. This is looking through and breaking through the manipulated data and the distortions that are out there so that you can understand what real wealth actually is. Gold and silver have been money for thousands of years. And when we talk about money, we're talking about an asset that is a store of value, a store of wealth. You tell me that the dollars that you think is money in your bank account is somehow storing your wealth, I'll quit. I'll quit the business. But you can't, because fiat currencies are worthless. And ultimately, if the dollar's worthless, gold is priceless, because we live in a real world, actually. I know it's fun that things are digitized and all that, but there's a physical world that everything runs off of. And gold and silver have been wealth for thousands of years. The move up has been tremendous. And as we watched the pullback the other night, we were texting each other and posting on X, and we were kind of having a good time.
Like, buy more, buy.
Look, and before people say, well, number one, we didn't have complaints. I didn't get a complaint from anybody. No one called in complaining about the pullback in the market, which is a testament to the fact that a lot of people were so far ahead on their holdings that they can handle the machinations of the market at this point.
That's right.
If you look at Michael Oliver, who's a great analyst in the market, he talks about momentum, that we are now in the momentum phase of this market, which means
powerful phase.
You're going to expect these type of machinations in the market, that there's going to be 10% pullbacks and 10% gains very quickly. We had a very big move in this market over the last little while. So, hey, nothing goes up in a straight line. But that said, not only did we not get complaints, but trust me, when the market goes down, we have a lot of product, okay?
That's right.
We have a lot of product that went down 10% or whatever the percentage was. But you and I were talking back and forth, and we were having some fun with it. And one of the news pieces that came across X was about India. So tell me how to reconcile the news about India and the pullbacks in prices, as though we are supposed to believe that the pullback in gold and silver is going to somehow be sustained.
With regards to that story, and it was just so exciting to see that although the price is very similar to COVID, when the lockdowns happened, we're trying to get the silver that was smashed down to $13. You couldn't get the silver, and it's exactly the same thing that happened. It's a very exciting thing to see. One thing is price, and one thing is value, and the ability to get a hold of the metal at that price. And in a surprise move, as this is going on with price, India decides to cut its import duty on precious metals by 9%. They recently announced this in their budget. The government surprised everyone and cut their import duty on all precious metals in forms such as bullion, grain, but not jewelry. So they're going after the raw material. We're not talking about jewelry, which we know India is notorious for. We're going after the raw materials. And if we look at the India imports and the demand that's coming from India, this is a dangerous thing when a dangerous, powerful player in the market to combat what's going on in the paper markets, because in June, India saw silver imports increase by 314% year over year to 228 tons. And that's so far. But the first half of this year totaling, get this, 4,320 tons. This marks a growth of 750% compared to last year. Last year, we were talking about, whoa, that was a world record. We were on pace for this. It was a world record last year. But India is not slowing down its importing of physical silver. You got to get your hands on it.
The joke is are we supposed to expect that lower prices in gold and silver are going to stop the Indian market? Or is that exactly what they're looking for?
They usually buy. I mean, India and China, they have the metal already. So usually just buy like Jim Rogers does. He already has a good stockpile of precious metals. So yeah, you buy on the dips. When it's a good deal, I'm buying more.
Okay, let's talk about JP Morgan. You had an article there about what they're advising their clients. In the last segment, Jerry, we were talking about the Magnificent Seven with their earnings took away over $1 trillion worth of value off the stock market. Visa is starting to experience delinquencies, which is hurting their business. And so what is JP Morgan suggesting to its clients?
Well, this is just going back to the last segment where I was talking about the economic indicators that are misfiring. We're seeing no recession despite all these warning signs. We cannot believe these lies. We can't believe these indicators. These traditional recession indicators in the U.S. are totally proving to be unreliable in the current economic climate. This is a constant trend that we have to follow. We get the information from, you name it. Pause for a second. What's where we get the inflation numbers from, which is why we rely on John Williams' shadow stats to give us the data to show us that inflation actually is not single digits. It's not 2 or 3%. It's actually in the double digits. And we see the reports of GDP growth this week. All of a sudden, it's expanding. But if you look into the data of this 2.8% surprise number, it was spending. Consumers are spending more, and they're using more credit cards. So the economy is not expanding. And
well, not only that, we just had a rate cut in Canada, and they paraded about like they've just done something amazingly wonderful for everyone, and yet it kills our dollar, and we start having to spend more for everything that we're bringing in with our number one major trading partner.
That's it. I mean, the
loonie, get out of here.
The loonie dropped to a 14-month low. Okay, it's cheaper to borrow now. And it may be cheaper for your mortgage, which is very helpful, but everything else is going to be going up. The prices will not stop from climbing.
But they even those cuts aren't really helping much, and we know it takes a couple years really for the rates to finally work their way through the system. So bringing it up to over 5%, whatever it really was, is now actually hitting to the point where banks are in serious trouble, and the repo market has to be bailed out by $17 billion, and they're not going to say who the real problem bank is.
Exactly.
You don't know. That's Russian roulette.
Exactly.
You're playing Russian roulette with your money and hoping that these banks stay open. Now, I really hope they do. But I don't like to see $17 billion being injected into the market. Look at Japan, a complete basket case of an economy, thinking that they could manipulate their way to prosperity with modern monetary theory, and it's a complete failure. And so what are you going to end up with? People are going to continue to rush to physical gold, and we're not the only people saying it.
No. This is the major warning that we have to talk about. This is where you need to be paying attention, because as we cannot rely on these indicators anymore, we have to follow where the smart money is going. JP Morgan issues a warning to its clients. Just this week, right after the bloodbath and one of the worst recorded days in history since 2002, and even before that, JP Morgan issues a note to its clients. JP Morgan advised staying defensive, with equities backdrop looking problematic, quote unquote. The bank analysts closed the note by reissuing their call to sell stocks and to buy gold, as the current economic landscape, including geopolitical tensions, central bank purchases, and the upcoming U.S. presidential election, all are creating a bullish environment for gold, according to their analysts at JP Morgan. As equity markets saw that significant downturn, they're seeing this as a massive buying opportunity for gold. Gold is being touted as their massive buying opportunity. And they also said that their traders are saying gold is set up for a new Super Bowl cycle, especially if we're betting on a Trump victory. You're going to see gold take off into the super cycle that we have been talking about. The third cycle is upon us. We are right now in the third cycle of precious metals. The first one was in 1970 to 1980, 10 years. The second was from 2000 to 2010, another 10 years. The third cycle began in 2016 when gold hit a bottom of 1,050. The two previous cycles saw an average growth of 1,400%. If we add that average appreciation to the low of 2016, again, it's a 10-year cycle, so around 2026 people. If we add 1,400% on 1,050 gold, that brings gold up over 14,000 an ounce. And at a 30-to-1 ratio, that puts silver at $500 an ounce. So this is where we get our data from the tables of JP Morgan themselves.
And they're not the only ones, by the way. The number 18778 silver, the website guildhallwealth.com. Get your physical precious metals, put in RSP, TFSA. You can buy it, take it home. I had a great conversation with a client today, Jerry, who was talking about becoming a snowbird and saying, "Oh, I heard you guys talking about the physical storage, which gives you the ease of liquidity. It's a great way to make sure that you have access to money all the time." And so talk to us about the depository. Or if you're just getting started, go to the website, Guildhall Precious Metals, pick up a tube of silver maples, an ounce of gold, a 10-ounce bar. Buy a 10-ounce bar every 6 months. You'd be surprised at what it's going to do for your wealth down the road. You know, we're so used to keeping things in the bank and investing in stocks and all of this stuff. You don't think about what actual assets can do with their appreciation. And really only being in the market can do that for you. You know, as someone who's bought gold when it was, I don't know, $4.80 an ounce or something like that, I can see that appreciation over time. And it's the same with natural fancy colored diamonds. We'll talk about that a little bit later. Nonetheless, Morgan Stanley calling for gold to be at above $2,600 for the year 2024. That means gold goes from $2,000 an ounce to over $2,600, a $600 move in gold in 1 year, Jerry. What do you make of that?
I think they're in a group of analysts that have given strong predictions in the commodities market, specifically the monetary metals being precious metals. The word precious connotates that they're money. And since we do have a monetary problem or a currency problem in this world, it is very important to rush towards precious metals, to rush towards, as Harry Brown mentioned, when the paper system begins to crack at the seams, the run in gold and silver will be explosive. And Guildhall, we give you that opportunity and the avenues for protecting your wealth entirely outside of a failing currency and the digital banking system. You don't want to pass up this opportunity, because the dip in this market is one that we've been waiting for. It's a flush out. It's like a little purge. We all need a purge every now and again. But this is a market that is very healthy. And as JP Morgan stated at the beginning of last year, where they see silver in the 30s this year, maybe even higher. But their reasonings was for the Fed cutting cycle. We're in the market right now, and we're anticipating further Federal Reserve interest rate cuts. I think the Fed tool that tracks, where traders are positioned, about 89% of traders see a cut coming up in September. And as we are in an interest rate cut cycle, the U.S. currently, the yield right now is at just under 2% on its way down. The minute that they start cutting interest rate, that yield is going to start dropping. The U.S. yield, the U.S. dollar will begin dropping, and the ascension in precious metals will be paramount. It will be life-changing for yourselves, and you don't want to miss this time.
I'm hearing a get positioned now sentiment coming from Jerry. The number 18778 silver, the website guildhallwealth.com. Put your mind at ease, give yourself a haven, insulate yourself from these potential financial risks, and own some physical gold and silver. I had a client call this week asking if we did it in education plans, and of course, you can hold it for your kids. I have it for my kid. It's been an amazing, amazing experience because we've only watched gold move up over the last 5-6 years. So absolutely, if you're getting gifts from the grandparents and whatnot, from the family, put it into the RESP, get 30% instant boost, and then buy into physical gold and silver. So great way. Call us. We'll tell you about it. Now,
what about the people who are saving for mortgages?
I gotta introduce you, Paul. I gotta introduce you.
Okay, introduce.
Very surprised. Paul jumped in. We're all excited about this dip for some reason. We're really leaning into it this time because Paul Wiseman jumping into the show. Welcome, Paul.
Yeah, thank you.
You missed it in the first segment. We were talking about as the pullback was happening, and we were texting each other. We were on a 3-way text, you, me, and Jerry, and but we didn't know that during that period you were trying to buy some physical. How did that go for you?
Didn't go very well. Limited amounts that were available. I had an email this morning from one of our largest suppliers trying to buy gold, which means it's
calling you
up.
To buy?
Well, no, just general email looking to buy gold. Now, what's happening is every year the refineries, you have to realize, take 2 weeks holiday, sometimes 3 weeks holiday, especially in Europe, like PAM Swiss, Valcambi. They close down 2-3 weeks.
They're heading off to the Olympics.
Well, yeah, I guess.
They want the violence of a left-wing country.
Well, they're looking for gold.
Yeah.
Anyway, but they close down for 2 to 3 weeks. Now, that creates shortages. The same thing with the Royal Mint. I mean, I'm expecting them normally to close the last week in July or first week in August. And it creates shortages because if you're selling product, you need to, get your product coming through the door. Now, as you said the other evening, we were texting backwards and forwards. It's nothing new. I mean, I told you, that's saying, sell in May and go away. It's always working. In June, July, they smash the prices down because the market is weak. The traders in New York, they're in the Hamptons. They're not interested in, doing anything. And there's a limited amount of traders. So when there's a limited amount of product being traded, it's really easy to push it up and down. And to me, it was a buying opportunity. And anybody that's out there, they are crazy if they don't buy. You're better to be, 1 month, 2 months too early than 1 day too late. You just won't buy when it starts to go up. And normally, Jeremy, over the last almost 20 years, we sell more gold and silver when the prices are up than when it's down. People don't buy on the dip for some reason. And, silver trading at $28 in that range, and gold is just under $2,400. It's an absolute steal.
Now, Paul, we were also mentioning in the last segment this idea of, everybody has their wealth digitized. And when you hold on to actual physical assets, you can appreciate long term how much they perform because they're just constantly going up in value. So we have a couple minutes left. I want to talk to you about natural fancy colored diamonds because you've been in the natural fancy colored diamond market for well over a decade, probably close to 2 decades now, and you've seen the growth in that market. So with a sort
I've
of a
also
slower
been an investor for a long time.
Right. So the market's not going crazy the way it was maybe 8 years ago. But what do you make of that? You see the trends going in the market. How do you feel about owning physical natural fancy colored diamonds at this stage?
Well, I had an interesting conversation yesterday with an accountant who looks after estate planning. And he said the magic words to me never sell anything, because it's only going to go up in value if it's a rare item. If it's an item that doesn't go down in value, for example, gold and silver, natural fancy color diamonds, they never really go down. They stay stable. But in the long run, they go up in an incredible rate. It's a question of holding on to that product. Never sell it. That's, my attitude. I own, diamonds. What's the point of selling it? I can't replace what I've purchased. There's nothing out there that can replace the type of product that we have in stock and what I own myself.
You've had that experience before, right? Where you've sold and you couldn't replace.
Well, we had an example where we had a 106 vivid blue, internally flawless, that I paid about 8-9 years ago, $460,000 US for.
What do you think that's worth today?
It's worth $2 million minimum. But a wholesaler that I bought it from, the dealer out of New York, within 4 months was begging to buy it back, and he gave me $200,000 profit on that diamond.
Yeah.
So I regret selling it. I mean, I could have held on to it, and I wish I did today, because it was one of a kind. And most of the diamonds that we sell are one of a kind diamonds. When I say one of a kind, maybe 8-10 diamonds a year come to market of the quality that we have. That tells you the rarity. The problem that's happening right now is China. I mean, because China is going through a little bit of a recession, the middle class are not buying diamonds. They're not buying luxury goods. Companies like Louis Vuitton and Burberry, they're in Hong Kong, not Hong Kong, but in Shanghai and different places in China. They're suffering. They're not selling their product. I mean, they're putting product on sale. Never been known before. Never been known. So when you buy a natural fancy color diamond, it's not day trading. You don't day trade your house. You don't have to day trade a diamond. What you do is you hold on to it, and it will increase in value, but it will maintain your health. Your wealth is an insurance policy. It will insure your wealth.
Is there any specific one that you're thinking of right now that you like, that would be great for someone to hold? Well,
we just bought a small package of natural fancy colored diamonds. Some fancies, a couple of intenses and a couple of vivid, all internally flawless. The company is actually going out of business in New York, and I decided to, they offered me the product, and it was fair. And I'm going to pass those discounts on to our clients. But we have some really spectacular diamonds. If you're looking for an investment, as little as $15,000, $18,000, $20,000, you can get into the market. You hold. If you want to put it into a piece of jewelry, which I always advise people to do, it's wealth to wear. You can pass it on to your heirs down the road, but it's going to hold its value. It's not like, we hear ads on the TV, on radio, for people selling synthetic diamonds. There is no secondary market. And, you see people wearing a 3-carat white, we don't sell white diamonds, but, a 3-carat white diamond that's, it's about a sixth of the cost of a carat diamond. But there's no resale market. And why would you buy somebody, whether it's your fiance, something that's not real? I mean, would you buy a knockoff purse and give it to your fiance or your wife or your girlfriend? I mean, it's an insult. I mean, why would you do that?
Real is rare. Paul, thank you so much. Let's do it again.
You're kicking me.
Well,
off.
The segment's over.
Okay,
so
I'm done.
So we gotta. If you want to give the numbers, feel free to give the numbers.
Yeah. It's just a great time to buy gold and silver. Go to our e-store or give us a call. The best way to buy gold and silver, if you do not have a TFSA, that's a tax-free savings account. You can put almost up to $90,000 in that account, and I recommend that for everybody.
The number.
And also a mortgage. If you don't have a mortgage,
so close.
you don't have the mortgage account.
Yeah.
We have a specialist.
The first-time home buyers.
Yeah. You've got to stop putting into that.
Yeah, for sure. Especially where we see the market headed.
One other thing.
Yeah.
Just to educate people, the government gave 0.25% rate cut.
Yeah.
The difference is the US dollar is trading at like 138. It's up 3 full cents in the last 3 months, which means if you're buying, we don't grow pineapples, and we don't manufacture too much product here in Canada anymore. Everything comes across the border, whether it's from US, whether it's from Mexico, whether it's from Chile, if you're buying fruit. The wholesalers that buy that product, they're paying 3 cents on the dollar, which is about 2.5% more. Don't you think they're going to pass that on to you? Because they're not sucking it up.
Yeah, plus the carbon tax.
So, they didn't give you anything when they knocked off 0.5% in the last 2 months.
The number 18778-SILVER, the website, guildhallwealth.com. We've got a lot of things to cover before the end of the show. One of the things is, who is selling stocks right now?
That is a huge reminder. And this is coming from the Kobesi letter, who reported this just before we started to record the radio show, that U.S. executives are dumping their stocks. U.S. executives, Jeremy. These are the people that run the show for these companies, the Magnificent Sevens.
There was also someone, a bigwig at... what was the hack?
CrowdStrike.
CrowdStrike. Some bigwig at CrowdStrike sold off like $1.5 million worth of shares 2 days before they had their issue.
Was it Nancy Pelosi?
No, it was someone who actually works there. Oh, sorry, I didn't catch the drift on that. You're saying she kind of works there, or she gives orders?
She had shares, right? Everyone kind of follows Nancy's trades. She's just been making millions off of these trades, insider trading. We'll see. But this is it. This is the percentage of publicly traded firms seeing net purchases from their officers and directors dropped 15%. To this perspective, the 10-year average of this metric is 26%. After a historic run higher, corporate insiders are taking profits on their own stocks. Kobesi asks, why are corporate insiders selling so much stocks? They see what's coming, Jeremy. We know what's coming down the pike.
Absolutely.
It's very clear.
I think this is a good segue to what Robert Kiyosaki's talking about in terms of where he sees the market headed. We've got some projections here from some of the major players, from Citigroup, etc. We already mentioned Morgan Stanley's calling for 26. On a previous show, we were saying Bank of America's calling for 3,000. And these are very short-term projections in the gold and silver market. If we look out further ahead and you start to play with the ratios and understand the value of gold versus a house, the value of gold versus the Dow, the value of gold versus oil, value of gold versus all the debt, you start to get massive, massive numbers. And it starts to be la-la talk. But, when you start to say, okay, well, let's bring it back to the short term. Can gold get to 3,000, right? Can silver get to 50 again? Once it breaks 50, where does it go? Mm-hmm. Is 300 a cakewalk from there? Can it easily go to that price at that point? So we've got some work cut out for us. But again, if Morgan Stanley's calling for it, Bank of America's calling for it, let's see what Kiyosaki's calling for.
Yeah, he's definitely going to get into his prediction for 2024 just now, but the yield curve. I just got to kind of segue from that to Robert's predictions. The U.S. Treasury yield curve we talk about quite often, and has been inverted for 747 days. The U.S. Treasury yield curve right now is on the verge and has turned positive for the first time since 2022. The difference between the 10 and the 2 has been negative since July 6th, 2022. In other words, the yield curve has been inverted for that record of over 700 days. In past economic cycles, every time the yield curve steepened so rapidly and crossed back above zero, a recession followed within months. By comparison, the second longest streak lasted for 624 days. So we've just surpassed that. This is another sign we are headed into a steep recession. What type of recession? We have to define that. If they're on the verge of cutting interest rates, inflation is going to continue. This is going to be a stagflationary recession, which is going to be amazing for precious metals. We're reminded this is the type of environment that we're seeing, with the VIX heading over 22%, with the Magnificent Seven losing over $1 trillion in market cap, with investors and a U.S. executive dumping stocks. This is the perfect environment for the Federal Reserve to cut interest rates. And the minute that they do, they're going to unleash the amount of force that silver has behind it. Looking to the predictions at the beginning of this year when silver was $23.85 an ounce to start the year of 2024. We had JP Morgan calling in the 30s, Commerce Bank in the 30s, Citigroup in the 30s, Robert Kiyosaki, legend, $500 at the end of 2024. And this was his quote: giant crash coming, depression possible, the Fed forced to print billions in fake money. By 2025, gold will be at over 5,000 an ounce and silver at 500. Why? Because faith in the US dollar. Fake money will be destroyed. Gold and silver are God's money. Take care. And this is a prediction. What will cause this to happen? They're going to have to go back to the printing press. They will need that liquidity. And the only thing that can reverse this trend is if they pack that printing press back into the back into the pit of hell where it became from.
And that is what's going to push the metals significantly higher, and that's going to create momentum, and people are going to see the prices of silver at $50, and they're going to want to get involved because seeing is believing. In the meantime, where is the product going to be coming from? There's not enough product, but there is always enough product at the right price, and that means that the price is going to have to go even higher before we can get the true value and understand the price discovery. So until that happens, position yourself. Give us a call, the number 18778-SILVER, the website guildhallwealth.com, and get your physical gold and silver into a registered account or purchase it direct from Guildhall. We're happy to assist you with that. We only deal in globally recognized products. If you've missed a show, catch us on Spotify, catch us on YouTube, catch us on Rumble, follow us on X. Thank you for everyone for listening, and can't wait to speak to you next week here on The Real Money Show on 640 Toronto.